Welcome to the deep dive. If you've been keeping an eye on finance, especially the digital asset side of things, well, you're in the right spot. Today, we're really digging into some fascinating shifts, how traditional finances, well, it's not just watching crypto anymore. It seems like they're properly engaging now on a pretty fundamental level. So, our mission here in this deep dive is to unpack some key trends we're seeing in our sources. We're focusing on what seems most critical right now. We want to help you feel really informed about, say, the growing institutional confidence, the huge infrastructure build that's happening, and also the role of ETFs, which is surprisingly powerful, all without, drowning you in jargon.
Absolutely. And what's really striking is the overall picture. It points towards, well, a significant maturation, wouldn't you say? We're seeing crypto becoming much more integrated into, mainstream finance. These aren't small moves we're talking about. These are strategic, foundational decisions by some really big players. So for you listening, the big question really becomes, what does this level of strategic buy-in actually mean for where digital assets are heading?
Okay, so let's get into the first major narrative then. Looking at our sources, it seems pretty clear. Institutional involvement in crypto, it's speeding up
Yeah.
dramatically. It's really moved beyond just like dipping a toe in the water. It feels more like a full-on embrace now by some major players.
That's a very strong signal, yeah. What really jumps out is the massive inflow into spot ETFs. I mean, these directly hold Ethereum, right? Which offers a different kind of exposure, maybe more comfort compared to the older futures-based products. You combine that with a giant like BlackRock, not just hitting, but crossing the $100 billion mark in assets in this space. That's huge. It's undeniable, really. These aren't just numbers on a page. They signal a real strategic shift. And it shows success in bringing sophisticated traditional clients on board. It basically validates crypto as a legitimate asset class for, standard portfolios. That's a shift not many would have bet on just a few years back, I think.
Wow, yeah, that certainly puts the scale into perspective, doesn't it? So, okay, if these huge capital flows are the first big wave, then the second wave has to be about how traditional finance is actually setting itself up to handle all this. Because you can't just invest without the plumbing, basically, to support it all. So what are we seeing there in terms of that infrastructure build out?
Well, that's a crucial question, isn't it? What happens when the big banks decide, okay, we need to integrate this properly? Citigroup is a really good example here. Their plans to offer institutional-grade custody. That means providing the secure, regulated setup that big funds and corporations absolutely require for digital assets. And then there's the stablecoin payment side. That suggests they're seeing crypto not just as something to invest in, but maybe as a better way to move money globally, potentially skipping some of the old banking friction points. So they are actively building that foundational layer, making it simpler and safer for institutions to get involved in a compliant way.
Right, okay. And this infrastructure, this plumbing being built,
Yeah.
that really sets the stage for something else, doesn't it? Something about how the market itself actually works. Because as our sources really stress, ETFs, they're not just ways to invest anymore, are they? They seem to be actually reshaping the market structure itself. What's the third big piece we're seeing here?
Exactly. If you connect the dots, ETFs have become these incredibly powerful market drivers. It's different from just, say, buying crypto on an exchange. These regulated products, they pull in a much wider range of capital institutional retail, and that creates new avenues for demand. It often ends up dictating price discovery in ways that maybe traditional trading doesn't or didn't. So they're doing more than just offering an easy way in. They're actually setting market trends now. They're fueling some pretty big price rallies, and they're definitely attracting a much broader audience than just the crypto-focused crowd. They're changing the game, essentially, not just participating.
Okay, so pulling this all together, what does it mean for you listening right now, and maybe for the future of finance generally? Just to recap, we've touched on three big narratives. First, that undeniable speed up of institutional money coming in. Second, the way traditional finance firms are proactively building the necessary crypto infrastructure. And third, this really powerful market driving role that ETFs have taken on. All these pieces together, they're clearly reshaping the digital asset world right in front of us.
Absolutely. And it's crucial to see them as interconnected, not just separate events. They collectively point to the significant maturation, this institutionalization of the crypto market. When you see things like the massive inflows into ETFs we mentioned, or BlackRock hitting that $100 billion milestone, and Citigroup making concrete plans for custody and stablecoin payments, these are tangible signs of these shifts. It really underlines the point that ETFs aren't just passive options anymore. They are powerful market drivers. They're setting trends, fueling rallies, bringing in wider interest. It genuinely changes the market's dynamics.
So thinking ahead then, given this accelerating institutional embrace and all this robust infrastructure being built, it makes you wonder, doesn't it? Does this convergence lead us towards, say, a more stable, mature crypto market? Or perhaps does it introduce new kinds of systemic risks we haven't really grappled with yet in this mix of old and new finance? What sort of new opportunities or maybe challenges might pop up from this evolution that you should probably be aware of? Something to think about maybe until our next deep dive.